Could this stock absolutely blow up and have a short squeeze before AMC? I don't know. As far as I can tell in our community, I haven't seen anybody talking about this setup, and this setup looks extremely interesting. So let's talk about it. But some disclaimers and disclosures first, because I'm kind of treading in unfamiliar water here. I've only ever talked about AMC, and I've kind of in other videos said that I won't mention specific tickers or anything like that because I don't want that responsibility. However, I feel like it is kind of my obligation to show you what's going on here because, again, I think the setup looks very interesting. Now, disclaimer, disclosure number one, I'm not telling you to buy or sell any stock whatsoever. That is on you as an investor. You need to decide what risk you are willing to take with your hard-earned money, and you need to make your own investment decisions. Don't listen to me. Don't listen to any YouTuber, as a matter of fact, because you don't know what their true agenda is or what their true intentions are, including me. Disclosure, disclaimer number two, I'm not saying to sell AMC to buy this play and to get into this play. I'm not saying that at all. If you've been on this channel, you know I believe in just holding the line. Just hold the damn stock. Don't sell it. Don't do anything. Just hold it. However, if you think that to be a true ape and to be in this play, you only have to have AMC and you only should be holding AMC in your portfolio, then you need to go back and reread the book on investing because that's just stupid. That's not how investors operate. Investors have multiple stocks in their portfolio, me included. And disclosure disclaimer number three, I already own this stock, but I have not bought it because of this setup. I actually kind of accidentally fell into this setup. I've owned this stock for, I want to say 7 to 8 months now. I could go back and check my portfolio when I first bought it, and I bought it multiple times, but the first purchase was about 7 to 8 months ago. And stocks like this, again, disclaimer, disclosure, stocks like this don't typically make it into my portfolio. However, with everything that was going on in the world, at the time when I first entered with additional waves of the pandemic and it looking like the pandemic was never going to end, and then some tensions with Russia and Ukraine and some other geopolitical things going on, this stock made it into my portfolio as a hedge. Think of it more or less as an insurance policy. I typically like boring blue chip dividend stocks. This thing is none of that. However, it was like an insurance policy, buying insurance on my portfolio in the event that something crazy would happen. So what are we talking about? Let's get into it. And why does this setup look so good? And by the way, everything I'm showing you on the screen, every article here, I will link down in the description below so you can go and look at them yourselves and do your own DD, which I guess is disclaimer, disclosure number 4. Always do your own DD, which kind of ties into disclaimer number 1 that you gotta measure and manage your own risk as an investor. So the ticker that we are talking about is ticker VXX. Some of you are probably already aware of it. Basically, it's an ETN, actually. It's not really a stock. It's an ETN, and it buys derivatives, buys short-term futures to essentially, to make long, complicated story short, it's essentially trying to track the VIX, which is the volatility index, kind of the fear gauge of the market. So this press release came out last week, came out March 14th, and this is when things got a little bit interesting. I was like, because I already owned this stock. Like I said, I bought it about 7 months ago, or ETN, I should say. And basically, so this is right from Barclays themselves, the British bank, who issues this security. And basically, they announced, as of March 14th, 2022, announced that it has suspended until further notice any I don't want to highlight that. It looks kind of crappy. Further sales from inventory and any further issuance of each of the iPath, pure beta, crude oil ETNs due to April 18th, blah, 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 as well as the one I'm talking about right here, the VXX. I don't own this one. I have no interest in it. But this one, I do own, VXX. So they have suspended further. Basically, they're not creating any more shares. Because, and here's where it gets interesting, is this suspension is being imposed because Barclays does not currently have sufficient issuance capacity to support further sales from inventory and any further issuances of the ETNs. These actions are not the result of the crisis in Ukraine or any issue with the market dynamics and underlying index components. Barclays expects to reopen sales and issuance of the ETNs as soon as it can accommodate additional capacity. Bullshit. I call total bullshit on this. Basically, investors were starting to pile into this thing because, again, it's like an insurance policy when there's crazy stuff going on in the world and in the markets, geopolitical risk, market risk, systematic, non-systematic, all those types of risks happening. Investors start buying securities like this because it tracks the VIX, the volatility index, and you can profit quite handsomely on it. I don't day trade it. I just put it into a little corner of my portfolio as, again, like a little insurance policy. But I find it very interesting that basically they're saying that they just can't keep up with issuances, and they're saying it has nothing to do with the very thing that people buy products like this for. I've seen this happen multiple times, and it's happening with this one, with this oil one, right? Basically, when they're called like these inverse, sometimes you get 2 times and even 3 times inverse ETFs and ETNs. So basically, if the S&P goes down 2 times, the product is supposed to go up 2 times, roughly, or vice versa. You can buy ETNs or ETFs where if the S&P goes up 2 times, then the inverse ETF, because it's inversely correlated, goes down 2 times. But when there's big runs on these things, the issuers of them, in this case Barclays, they run into problems because there's a run on them. It's kind of like a run on the bank, right? Everybody's going, and they just can't keep up anymore. So there's the press release. So that was the first thing. I was like, this is interesting. So what's happening basically with this press release? Actually, I should have carried on here. I don't know if it says this. I think it's in another screen we're going to show. But basically what's happening is now that Barclays is not issuing new shares to accommodate all the trading activity and volume, because it's been heavily traded over the last couple of weeks, is it's now basically derailed from the VIX itself. So it's gone rogue. This thing has gone completely rogue. It's on its own, it's in its own universe right now, and it's just trading completely off the rails from the VIX. So that's one of the reasons why it makes it interesting to me. Here's the next thing, and this makes it very, very interesting. So the float is extremely small. So when I said at the start of the video, this thing could blow. What do you need for what is one of the 2 main ingredients for a short squeeze? Is ideally a very small float, and then ingredient number 2 is a large percentage of that float is short, so that there's not many shares left to buy. So if you look at our play, AMC, like what is the float at? I think it's like 539 million shares, supposedly. Look at the float on this guy. There's only 33 million shares outstanding. Now, there have been trading sessions last week where there was like 75, 80, 90 million shares traded in one day. So like 3 times the float, 2 to 3 times the float traded in one day. Very small float, which, and again, all of these links will be down below in the description, which leads to the very next part of this whole equation, which very small float, and this is Reuters article. So volatility tracking note, VXX at risk of short squeeze according to S3 Partners, and we'll talk about S3 Partners later. Basically, blah blah blah. So that's the official title of this ETN. VIX short-term futures ETN may be ripe for short squeeze, potentially dealing more losses to investors already battered by recent gyrations in the popular volatility tracking ETN analytics firm S3 Partners. Warned. Well, again, that's like what I talked about earlier. This thing has gone rogue now, so it's not trading as the VIX is trading anymore. It's gone completely rogue, so there is because it has happened in the past. When this has happened, these things have gone to basically zero, and that could happen with this, so you got to do your own research. However, there is a very, very, very high short interest on this stock, so blah, 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 blah. You can read all this yourselves, but it's this part right here, so this big chunk right here. Let's highlight it quick. And so ETN's price it's basically so it shot up, like at one point it was up 58% last week. It's given back some of those gains, but it's short interest, which stands at 90% of the float. So remember how big this float is? There's only 33 million shares, and according to S3 Partners, 90% of the float is shorted. Wow. Pretty interesting. So it makes it a top candidate for a short squeeze, which typically occurs, as we all know, when asset prices rising forces bearish investors buy back borrowed shares, accelerating upside momentum. S3 analysts Ihor Duzowinski, probably said that totally wrong, and Matthew Unterman said in a Wednesday note, the VXX ETF is the most squeezable ETF in the U.S. market. That is a quote from them directly. They wrote, noting that recent losses for bearish investors may put pressure on short sellers to unwind, because if they took, I don't know when these short sellers took the positions, but when this thing was at 28, 29, 30 bucks, if they took their short positions then, and then we dropped down to like 20, 21, 19, and they start to cover, and we have 90% of the float shorted, and there's only 33 million shares available, that is like the perfect storm for a short squeeze. High percentage of short interest, very, very, very small float, and nobody really talking about this one. So I think it is a prime candidate to fucking rip. That's just my opinion. Or it could go to completely zero. I have a position in it. It's not a massive one. Like I said, it is a 7 to 8 month initial purchase into this, and then I average down. So in full disclosure, my average share price is under $18. So as of right now, I think it closed on Friday around $25. So right now, I'm still in the green, right? So it's easy for me to sit comfortably because I got into this position early and I'm still green. So it's easy for me to sit here comfortably and say, hey, this looks pretty cool. But I'm also green right now. So again, that gives me a little bit of added confidence to say that. However, now that this new development has come around, I don't care. Like, I don't care. I'm going to hold this thing. It's either going to go to zero or it's going to go to the moon. We're going to see what happens. But I ain't going to sell it now because if these guys start to cover, we could have a massive, massive rip on this one. So again, who is S3 Partners? Well, again, the links will all be down below. Basically, I'm on their website. Go to the About section. I kind of scrolled down, so you can read all this yourself. But I scroll down to this part because I think these guys are pretty interesting. I don't know a lot about them, to be honest, but it sounds like they're kind of on our side, which is cool. So, and the reason why I think that is basically they're a data mining company, right? But it's this part right here. So due to the infrequency of short interest regulatory reporting, we know a little thing about that, don't we? And irregularities in how and where over-the-counter OTC data is stored, it's virtually impossible for investors and treasury operations professionals to obtain a clear and accurate picture of the capital markets in real time. Sounds kind of interesting, doesn't it? Isn't that kind of the issue we're having right now with AMC and our play? And then blah, blah, blah. You can read all this yourself. So again, they're a data mining company. But then it gets interesting down here as well, why they exist. So kind of like their mission statement. So an increase in the number of trading destinations, concentration of clearing venues, and absence of protocols cause opacity in all markets. This lack of global transparency creates economies for data. So basically they're saying there is a lack of transparency in the market. So they are cultivating and mining and filtering data to give us, I don't think it's to us, the retail investor, but to at least give somewhat of an idea and a clearer picture and a more transparent picture in the markets, kind of leveling the playing field, so to speak, I guess, because like any resource, the integrity and purity of data, blah, blah, blah. Again, you can read this, refining data potential into financial power is our business. So that was a lot. What do you guys think based on what you just saw? Again, absolutely do your own research, do your own DD. Like I said, I've been in this position very early. This whole thing is not at all why I bought this position. I haven't even bought more shares. Again, in full disclosure, I have not bought more shares since this development because I'm keeping the position that I have, the percentage of my portfolio that it is. However, I kind of accidentally stumbled into this because I initially bought it just as a hedge, as an insurance policy, so to speak. But this new development is quite interesting. Love to know what you guys think. Do you hold any of this in your portfolio already? Let me know in the comments below. See you in the next video. Peace.